Hey, it's H here, and on today's video we're checking out S&P 500. This chart is the SPX and it can be found on Tradingview. The chart's on logarithmic scale as the price is basically just parabolic. So that's why I'm using the logarithmic instead of the arithmetic or semi-logarithmic one. Now, today I wanted to go over the high time frame count and maybe later a bit more closely on the low time frame count, but I think we got some ideas for that as well here. So let's jump right into this. So this, let me close those for now. So here, this is the high time frame count all the way from 1800s. Yeah, so basically I've marked here as end of Supercycle 1, then into 2. These don't matter too much into the count itself, but they're pretty nice to look at. These are not overlapping and seems to be pretty alright. Now on 12-month time frame we got the top here on RSI, which supports it being a wave 3. Ending around 2000, around 2000. Here I got the 1, 2, 3, 4, 5, as in, let's see, as in the cycle scale, and just wanted to show this WXY here and why I placed 4 here instead of here, just so these guys can get alternation between each other on the corrective waves. Same here, this needs to be a zigzag, and here is something else. Let's check that out, what it actually is. So this looks like a expanded flat, so that's what I think. Yeah, so this is a zigzag, expanded flat, alteration between the corrections, which is something that we are looking for always. Now that brings us to the current price action after this expanded flat into the Supercycle 4. We're again starting a new cycle count from around 2009. I marked this as 1 here. Arguably it could be somewhere here. Highest peak here on RSI. Couldn't get a suitable count up here, so I think this is better, but I wouldn't disregard this either. We got the triangle or expanding triangle here on the 4th marked, so it doesn't really matter which or where we place it here, as this is not correct price action anymore, and there's alteration in any case. Now we can again go a bit deeper here, and this is now the price action of the last couple of years. Now this is the code low here, ending the cycle 4, and obviously MACD is bottoming out really badly here, but that is fine. Now this was the idea for this cycle, and I have this parallel channel from 1 to 3, and actually this should be, this is wrong, it should be from 2 to 4 to 3. It's not correctly placed. Hold on just a moment. Come on, the snapping on Tradingview is sometimes so finicky because there's so many candles. I should just go over to higher time frame to place this, but then it wouldn't be as accurate. Just place it there. In any case, wherever this might be, there's going to be overthrow as seen here. When the channel breaks downwards here, it is one possible short as if we would think this would be actually the cycle wave top. Now this is arguable of course, as everything with Elliott Wave, but breaking this channel is something to look out for. Another channel that I had is the Supercycle one, not Supercycle, Supercycle one, yeah. And there is, again, if this is the fifth of this cycle, it is completing the fifth of the Supercycle, which would mean a lot. This would mean that this would be one of grand Supercycle, and we would come down for wave 2, whether it's on logarithmic scale or on arithmetic scale. It doesn't look too good. Arithmetic is of course more forgiving, giving us to the 618, the drop from all-time highs, still 60% for the 618 of course. Now, if that is not the case, we can just look, this actually should be in that folder as well. We should be looking for something else. Now, let's look into the being cycle done. So having it complete the fifth of the fifth of the fifth into the massive downfall here. So I've marked this as primary scale. Let's bring out these indicators as well. Can we fit it somewhat here? So 1, 2, 3, 4, 5 into primary one here. Some kind of topping out of RSI here. Another peak around here and here on RSI. Could be used for wave 3s. There's one peak here. This doesn't give you a good reading for any kind of divergence, which is a bit weird to be honest. But if we disregard that, this one is wrong again as well. Should be from down here. Go up to the third. There we go. And obviously this channel has been broken already. It's been tested multiple times here until it broke. So this was tested once, twice, 3 times, and on the 4th it broke down. Now this is not a typical, I guess it could be a typical trend line that other people are using, and that is why it caused such a huge breakdown here, as non-eliticians use these trend lines as well, where they seem to like to draw the trend lines wherever they fit the best. But this is definitely one possibility. Now, is there an alternative to this without topping this whole super cycle? Yeah, for sure there is. And this peak here is going to give us some information on it. Now, just to compare to the previous one, we got primary 1 to here, and this was the top of the third of primary. Now, okay, this is probably wrong as well. This is the highest point here. This should be the third. I don't know which count I had that previously on. And there we go. Now this here is another 1, 2, 3, 4 with small and really small 4th and 5th of the mining scale, but I didn't want to clutter the chart too much for it. This should be on cycle done, and we can check out the parallel lines here as well. And obviously this is broken as well. We back tested here, few times as support and backtested here as resistance. So if we are believing this count, these fit the count really well. Also looking like there's some support here. Of course we didn't know about this because we're pivoting it all the way here from 1, 3 to 2. Now where would the fourth be to be expected? We can just check out the 382. Around here, around 3800. And check out, oh yeah, the SPX one doesn't have volume, which is a bit bad. I might need to transfer this to another chart to check out the volume. But yeah, 3800 is around the price where we might be looking at this. Again, invalidation here at the top of primary one, around $3,600. Yeah, this is just for the smaller scale again, and we can check that out as well. Now let's check out the correction for the 2 here. I'll mark this as a zigzag ABC, and here we got something else. So ABC into W, ABC into X, and then ABC into Y. Now I had some kind of a issue here with where this ABC here ends. Is it here? Or is it here? The better location for this, at least for me, I think is having a truncated fifth, although I really don't like them. I'm thinking this as 1, 2, 3, 4 and 5. Now if we had the C here, I'm not sure how I could bring out any kind of count here. I guess I could bring lower time or lower degree WXY into here, so something like so it'd be ABC, ABC, ABC here, but I prefer this as this subwave of the X doesn't have a combination as a correction here. So if we can have less combinations, the better, I think. And yeah, I think that is from Elliott Wave principle as well, that you shouldn't have too many, or shouldn't have the complex corrections inside the complex corrections, but that might be something wrong as well on my end. But I think this might look as well better. Now that count ends here onto the Y, and I've labeled this as bullish structure here. Now this is 1, 2, 3, 4, 5 into 1 of minute, and now we're looking for the wave 2 downwards, and this structure is a bit weird. I can only mark it as WXY. Why? Because of this. Well, actually, let's check out this first. This doesn't come up to the 0.9, so it could be still a zigzag, but having this as the first leg of the zigzag and this as the second, there's no correlation between that. And this first wave here looks like 3 waves, then 3 waves and something else. This could be 3 waves as well. So, and why can it be not a just regular ABC? Well, this pullback here is really short. For it to be a flat, it would need to come up all the way here to the 0.854, or some people use the 0.9 as well. So it's not even close to that, so we would need to use this as as a WXY into the 2. Now, if we want to be bullish, this is the only way I can see, and this doesn't look really pleasing, and I can't really call what this structure is. This looks like 1, 2, 1, 2, 3. Then it looks again 1, 2, 3. So APC, APC. So that is something that I don't really like. It could be something like that this is just the first leg of wave 2, and this is the connecting wave for this, and now we're going down. Now if we break this, then this is no longer the case. There's no option for bullishness, at least to me. We can check out these, oops, and wave C, and the 618 is the minimum usually for the wave C, and if we would stop there, then this bullish count would still be go. Now here we would have the WXY already, and then we would have another 3 waves and another 3 waves. So WXY weeping with the first wave being a XY, which is something I don't like, but yeah, just a thought. Now, I think we've gone over the main points here that I wanted to present to you. Got some kind of bullish scenario here for the the 5th of the of this primary, and also a huge bearish scenario if the 5th of primary here is done. So you would need to correct this whole structure of Supercycle, which is something definitely we don't want to feel like. And I think that is all the things that I wanted to show actually. So thanks for watching, and suggest me another chart if you would like me to look into one. Thanks for watching, bye bye.